Good morning, everybody, and this is your Forex day trade setups for today. So Euro USD still stuck in this range. One interesting factor here is that this trend line has been broken, and it does look like we're starting to retest this area. And there's no exact, I suppose that's the closest level that I can see is this inside fractal over here. So one thing against a short here is the fact that the oscillators are now starting to round here. So still very cautious. I think for me, still sitting on the side here, waiting for one of those levels to give way. So the levels I'm paying attention to for longs are 102.785. If we get above that, I'm looking for a break and retest of that level for a long. And for shorts, we're looking at 100.960. But if you have a look at what happened yesterday on the hour, you can see lots of rejection here of the 155. You can see, look at this 1, 2, 3, 4 pin bars. So for 4 hours, we basically tried to break through and we failed. We rejected before dropping and gapping down. So if that's anything to read into, plus this trend line rejection, you probably will get something out of the 15-minute chart. And what I would do is basically a London breakout strategy. So the current low of the day, I'd want to see a 15-minute break below that and a retest for a continuation to downside, but you're probably going to be capped around the 100.960 area. Personally, I'm still sit on hands here. We'll wait for some better structure with one of these extreme levels I've given you to break. Moving on to US dollar Japanese yen, we've had a nice pullback into an area of resistance, and you might as well just add your levels in. This is the zone. I just want to add one more here. You can see we have a moving average crossover. We are kind of below the 155 at the moment, although it's messy. We've got an inside bar formed here, just off this bit of structure here at 134.319. Oscillators pointing to the upside as yet, haven't rolled or crossed over yet. And if we drop down to the hour, you'll see a couple of things here. First thing is diversions, and that is continuation diversion. In other words, another leg up. And then you see diversions on the top, high, 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 low, which is reversal diversions. So 50-50 call. Also shoulder, big head. Are we forming a right shoulder here? So this area here is pretty important, and that is 134.319. A rejection here, another rejection here will probably set us up for a move to the downside. But we've got crossover the moving averages. We sort of hovering on the 155. Kind of a sit on hands, warning bells going off in my head. Depends which way, but it's going to move in a direction, but there's no real decision of which way it would go. So I would be leaning towards a London breakout strategy for this morning, and that would be remember the first 7 1-hour bars is your range. Break of that range, either direction, is the direction you trade for the height of that range. I don't really see anything else at the moment. You can see strong move up, pullback, fairly strong move up, bit of a gap up, could be an exhaustion gap, and crossover moving averages. You've got a separation of the oscillators here. You've got diversions all over the place, both directions. So could move to the upside, could move to the downside, basically. So first 7 1-hour bars, draw your range around that, and if it breaks in either direction, do it like that. Say that's the start, so that's the first 4. Break, then you're probably looking for 134.817. Break to the downside, then you are looking at this inside tail here. Let's just use this level here. You can see how it lines up with this bit of structure here at 132.913. So personally, I'm set on hands on the dollar until tomorrow with non-farm payrolls out the way. Moving on to the pound and the British pound, Japanese yen. Similar kind of situation. We've had a fairly strong move up this week into an area of resistance, and I just want to get it exactly on the level. There it is there. You can see we have an inside bar rejection off here, cross over the moving averages. Oscillator starting to head back to the upside. Everything is setting up for a rejection of this level. So what I'm looking for here is to see if we do get that rejection. So if we get above here at 163, if we get above 163 and find some support, then we're probably heading higher. But if we do reject this area, I would expect us to move to the downside. So another London breakout strategy here, but with the bias to the downside. So whatever break and retest of the first 7 1-hour bars is in play, then I'm looking for a move at least back down to 161 100. Breaking through that, then you're looking to test these tails over here. But it's also poised. It can go either way, to be honest, if you look at everything here. So it could form, it's a strong move up, basically. So it could very well just break up, find support, and then start heading back to the upside. So just keep your stops really tight on that one. Moving on to Euro British Pound. So we were looking for continuation to the downside yesterday. Not so convinced on that when we've got this divergence forming and this chaos here. So that chaos is very typical of a flag. You can see there. So when you see diversions like this and then price action doing that, more than likely going to turn out to be a flag. So with a squirt to the upside, but it is so messy on the hour if you look at that. It's up and down, up and down, up and down. But we are below the 155 EMA. We are in amongst the moving averages here. So this is another pair that is really poised for something, whatever that something is. So I'd want to see us break out of this flag before starting to look for anything. So at the moment, it's a break above 083865 for anything. I want to break and a retest of that area for anything to start showing itself. So that would be for any longs, and then basically looking for a break below 083397 and a retest of that area for any shorts. So the long and short of it this morning is currencies are poised for something, but there's no clear indication of which direction they're going to be heading. And I suspect it's related to non-farm payrolls tomorrow. So the whole market is they're happy with the Federal Reserve's decision and so the interest rate hikes be actually tapering off from the Federal Reserve side, but now they want to see what's happening in the job market. So that's kind of my view. I think you're probably only going to pick up some real good trades in Forex from next week onwards. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.